Thank you, everybody, for joining. My name is Shane. I run the events at 10 Capital Network, and we have a great reverse pitch for you today with Vadim Balashov of Viaduct Ventures. If you have any questions during the event, please go ahead and put those in the chat, which I will be unlocking in just a minute here. And with that, I'm going to bring up Paul Martin, our CEO, to get Vadim introduced.
Thanks, Shane. My name is Hall Martin. I want to welcome everybody to today's presentation by Vadim Balashov. He'll give an investor reverse pitch. He runs a fund in the AI space and other areas, and looking forward to having him talk more about what's going on in the AI space and what they're doing to be a part of it. If you guys have questions, go ahead and post them in the chat box, and we'll get to them at the end of the presentation, maybe along the way as well. And then afterwards, we have a startup presentation by Jay Cormier, who's actually using AI in their medical device. The company's called Viaduct. So looking forward to your feedback on today's presentations. And with that, let's go ahead and bring up Vadim Balashov. Vadim, if you'd like to go ahead and launch your slides, love to hear more about what's going on in your world and how your fund is working with it. So with that, we'll have Vadim of Viaduct Ventures kick off.
Thank you. Thank you. What's happening in our corner in the world? There is no such thing as our corner in the world anymore. The world is massively interconnected. Let me, while I'm talking, let me start the screen.
Sure.
So we are a relatively small Series A California venture fund. We is the two of us, Stuart Gunther, who is in Menlo Park, California. He is, he not only worked his entire life in Silicon Valley, but he also actually was born and grew up there. Saw the entire change over the past 50 years. Has a wealth of experience working as an angel himself, working as part of angel groups and venture funds. I am in Vienna, Austria, small stage venture transactions and all the way to jumbo IPOs, jumbo Eurobond offerings, bond offerings. Both are in economics and finance. So that's the that we're trying to bring to our portfolio. We focus on Series A and profit today, and through cloud to enterprise clients. The world is going through a massive change, as you have all probably noticed. Consumers, businesses, and entire nations are choosing their behaviors. Changing their behaviors, choosing new ways to do business, new ways to do interaction. And there will be massive value destruction in some industries and massive value creation in other industries in the next cycle, let's say in the next decade. The goal of our fund is to capture this value creation, capture the massive value creation that will happen during this once-in-a-generation change, find brilliant new technology businesses, and our goal is to try to do it very soon. We're at the bottom of the economic crisis. 22, 23, 24 will be the best time to invest in new vintage companies, the best time to invest in companies that are raising equity financing for the first time. Our main technology focus is artificial intelligence. Artificial intelligence, of course, is a massive opportunity for commercialization. As we all know by now, people have been working on applications of artificial intelligence and on data science over the past 15, 20 years. Artificial intelligence can work wonders on supercomputers and in laboratory settings. Right? People who have talked to IBM Watson are talking about being a very, very wise old man. right? It's very, very smart, and the tasks that artificial intelligence can solve in a lab environment are tremendous and mind-blowing. The delivery via the cloud technologically and via the subscription model, SaaS model, economically is probably the best in terms of achieving large margins. And the US-based businesses, because US is a growth market and it has the history and the infrastructure, financial infrastructure to both fund scaling and then infrastructure for M&A and IPOs better than anywhere else in the world. How we grow value. We invest at Series A or right before Series A. We usually take a major investor status, which among others means ability to co-invest in our pro ratas at later rounds, and a board position, either a full board member or a board observer position. We use our time and experience and position on the board to improve the business and the financial side of our portfolio companies. We grow together with the founders and the boards. We especially, both Stuart and I, we especially add value on the commercial side, on the side of the financial organization, corporate finance preparation for the next round. We double down our investments in our growth leaders. And sometimes with the help of our co-investment with our LPs, we triple down into our investments such that we stay, even though we're an early stage company, we stay and keep investing in our portfolio companies all the way to Series B and C. How do we choose companies in which we invest? We look for. Well, I talked about the industries and the stages. We of course are looking for products or markets that have the total size of the market is in billions of dollars, so that there is a possibility of exponential growth in revenues, in capitalization in that market. We spend a lot of time with the team, we pretty much spend all of our time with the team, the founders. We're looking for founders that are strong, mature, smart, obviously, but we're very importantly, we're looking for founders who would be open to comments and suggestions from the board of directors. And for change, we stay with our founder, we stay with our investee companies throughout our investment period, sometimes through our formal positions as board members or board observers, and sometimes informally through just regular scheduled and unscheduled off-the-cuff communications. My estimation, I talk to every portfolio company at least 20 times a year. The other, I would say, the other very important criterion for our selection would be recommendations or where this opportunity came from. You have probably heard this before. We like to invest in companies that other investors have already deployed to. We are working with the largest and most solid accelerators, such as Plug and Play, 500 Startups, Expert Dojo. But we also very much like to work with recommendations from early stage, smaller venture funds, people who do exactly what we do. When an opportunity comes from an investor that we know and respect our investment, it will be so much easier to make our investment decision. Yes, this page, thank you. This is the list of our portfolio companies. We have exited 3 of them already. What we have done in the past is exactly on focus on the thesis that I was just telling you about. Tugboat, the top brand on this little tugboat, little picture of the tugboat. The company was actually called Tugboat, and it is an AI-based business process software for cybersecurity certification. It was an amazing, B2B application that grew 10x over 2.5 years, and very quick and efficient M&A at the end. Blue Dot is an AI-based location service for enterprise retailers and enterprise food chains like McDonald's. Dapcake was an AI-based video transmission and video platform. Very interesting technological idea that is now being improved, and the company has been acquired, so the technology is being improved and deployed under a different brand name. Accern is an AI-based financial analysis tool, no-code financial analytics. Accern.com, look it up. This is the company that is still in our portfolio. It's growing very well. We're very happy. And Canvas Analytics on the right is an AI-based manufacturing 4.0 company. Right, it works with the largest enterprises with industrial processes that are 24/7, chemical, metals, foodstuff production. And those enterprises usually have all the various data points and all the various gadgets and measurements. But what Canvas does is pulls it all together and creates predictions, alerts, analysis that is able to deliver pretty amazing improvement to the bottom line for these clients. For that reason, Canvas is also a leader of our portfolio, growing. Investors and clients are very, very happy at this time. Our first fund, Viaduct Ventures Fund 1, is the investment period has concluded. Right, we're currently doubling down and growing, taking care of our portfolio companies, those that we have not exited already. Our results have been pretty good in the top 25 percentile, so investors are happy, and that's why we are currently raising our second fund, Viaduct Ventures Fund 2. Our still small, our target size of the fund will be $50 million. That will be enough to make 20 to 25 first investments of $500,000 to $1 million, and then reserve the rest of the money to double down and triple down in our investments, potentially all the way to Series C. And that concludes my prepared remarks. I would be very happy. Thank you. Disclaimer. Future results are never equal historical results. Venture capital investment is a risky investment. So this is the point where I should stop, and I will be happy to answer your questions.
So we had one question come in on the chat box. We'll kick off with that, and then we'll have other questions that we like to ask. The question is, thanks, hello, we are using some AI in drug optimization and R&D. Do you invest in early stage biotech firms in New York?
We have not invested in drug optimization companies per se. We like IT firms. We do understand artificial intelligence for drug optimization, for drug. Currently, we're reviewing a pre-Series A investment in a company that provides AI-based tools for drug trials, companies and drug trial advisors and specialists. We have looked at a few, never invested, but we have looked at a few where AI was used in the actual medical treatment. Like, for example, AI looking at X-rays and mammograms, and really assisting with diagnosing. We have looked at that. So where the company's commercialization is selling an IT product, a SaaS IT product, we will invest in that. Where the company's product is actually drug discovery and a drug, this is a very capital heavy industry, and we will stay away from that.
Great. Well, my next question is, there's a lot of talk about Chat GPT and so forth. Investing in AI, what do you think is the value of Chat GPT? Do you invest in that, or how would you approach that, given it's getting so much interest at this point?
We are beyond investing in Chat GPT. People are talking valuing it and its competitors, Google, Microsoft, obviously, in billions. Chat GPT is a very clever. The way they rolled it out, the way that they introduced it to the market was a very clever marketing trick. If anything, having seen people, read about people's results of trying it, it's becoming more and more clear that artificial intelligence needs a lot of training. If you want to really deep, reliable results, you need to train artificial intelligence in narrow verticals of where it understands the vocabulary better, where it understands the meaning of the data better. ChatGPT, as you know, has resulted in some comical results or nonsensical results. You can afford that if you're an internet writer. You cannot afford that, for example, in a 24/7 manufacturing environment. You need a much better reliability in that environment. So deep technology, deep understanding of human language, great. Is ChatGPT, does ChatGPT have an immediate commercial use? Not really. I think people who are focusing on specific business models, industries, terminologies will be achieving much better commercial results, and then they could use ChatGPT as a additional help or additional fun feature to their commercial features. It's what ChatGPT does, though, is it confirms that data science and what's happening in the lab is pretty amazing, right? What is possible in the lab in secrecy somewhere in a supercomputer or in the army laboratory of the Chinese army or the US Army. We will see that seep into reality 10 years from now. It will blow our mind. However, what is reality today already? It's pretty mind-blowing if you think about what we knew 20 years ago. So we, as a small fund, we're focusing on what's practical and what's narrow to a vertical, where the artificial intelligence can deliver very, very immediate practical results.
Well, to that point, it seems like there's a lot of tools on the market even today that support sales, marketing, customer service, coding, and other parts of the business model. Mm-hmm. Where do you think the best fit is so far, based on getting very practical with the use of it in a specific startup like that?
Right. You mentioned, again, articles, writing, but there are a lot of other uses that is maybe less known to the general consumer. But healthcare, of course, creating new drugs and creating new knowledge about genes, viruses, and so on, but also, like the example that I used in looking at mammograms, just practical usage of detecting diseases or abnormalities. Banking, financial services, insurance, fintech, literal statistics and predictions in retail banking, retail insurance industry, predictions of consumer behavior, consumer failures, fraud, and so on and so forth. Internet of Things, Manufacturing 4.0, literally keeping track of production assets and predicting catastrophes and predicting wastage, really helping run the organization without people present. Cybersecurity, of course, massive transportation, cybersecurity, massive prediction of what is functioning normally, what is functioning abnormally, and throwing up red flags and cybersecurity measures. Defense.
Our next question is, does your firm invest in blockchain tech, in particular blockchain fintech?
We have not invested in blockchain. We are trying to stick with fiat money and tried and tested business models of making revenue, driving revenue, and through revenue driving valuation and investing in equity instruments. I understand we need to understand blockchain and the crypto economy. We're trying to stay on top of that. We have reviewed a few, and so far we have not invested.
I've heard the thesis that blockchain and AI together make a killer app. Blockchain is capturing and having people install data in their wallets, and then AI can come along and actually make sense of that data as far as making better decisions about it. What's your take on that approach?
We have not seen it actually done. You know, startups that are really making use of artificial intelligence in real life are hard to come by. Startups that are really making use of blockchain technology in the real world outside of the cryptocurrency trading sphere, those startups are very hard to come by. So startups that do both and that are at the stage, the Series A or pre-Series A stage, we just have not come across any of those.
And where do you think the current wins will come from AI? We talked about deep verticals, but are there specific applications that are not well known that you think are going to be big home runs for AI?
Anything and everything within manufacturing 4.0. There are industries. We're currently reviewing a startup. There are industries that have been barely touched by automation. For example, we just recently found out that the oil fields, large construction and oil field services industries for oil and gas exploration and production are still using faxes and emails. Whatever like Salesforce can do on the one side of the equation, and oilfield services are on the opposite side of the equation. It's a tremendous industry, a tremendous vertical in terms of dollars that is in tremendous need of digitalization. Obviously today with the use of AI, no implementation, no change in business processes. You just roll the AI tool over the cloud, and it immediately starts. If somebody wants to use a fax, fine. AI will read the fax and understand it. If somebody wants to use an email, fine. AI will read the email and understand it, and create an easy and understandable information for billing, processing, payments, and quality control and disaster prediction. So one big opportunity for AI is to go into industries that are still not digitized enough, and to try to digitize them. And then obviously medical, and then obviously manufacturing 4.0. Those are the big ones where money will be made in the next 8 to 10 years.
So a question from the audience is, AI in the field and in manufacturing requires solid connectivity and eventually taxing on network infrastructure. Is that necessary support to a high-T infrastructure for all this new data exchange a concern? And how do you plan to address that with your investment choices?
Canvas Analytics, the leader of our portfolio, is working with the largest enterprises, right? They have resolved the issue of having all the right gadgets in their production cycle, and the issue of connecting those gadgets, be it via wireless or just via fiber optic cables, right? So luckily for us, our portfolio leader is actually working with people who can afford a network as wide as they need. As far as the industry-wide, I think that increasingly people are starting to realize that AI pays for itself, that infrastructure investment is worth it. We have seen, especially 2020, right? We have seen a lot of, before that, we saw a lot of resistance of a lot of thresholds. Going, yeah, all automatically running everything is great, but there is a risk. We need, just in case, we need people in there. And then 2020 came, and all of a sudden we found out that we really don't need people in there. So the threshold of kicking people out of production facilities and letting the robots run it, that threshold has been removed, and that is also a contributing factor to growing AI in manufacturing.
Right. I remember in a previous discussion, you talked about one of the killer apps is the interfacing, how AI can help with interfacing into the various systems out there. Can you tell us more about that?
Interfacing as opposed to integrating?
It could be both, but interfacing was what we talked about last time, and thought that was kind of interesting that people could interface to a database with a query as opposed to having to type in the very specific commands of a database. They could use more natural language, that type of thing.
I see. Yes, interfacing, just using normal human language is very easy and interesting for people. I think realistically, most of the value is produced from where AI extracts information from business communication systems, from emails, and from PDFs and from faxes. Right, the real value is coming from when AI just reads whatever comes in the door and understands, oh, this is X service that is related to Y product, and we need to create a Z red flag for the person to decide, should we pay this bill or not? And if the person presses a button, yes, we should pay this bill, then again, AI decides which bank provides the command, which date, and so on and so forth. So yes, being able to interface with a normal human being is useful and interesting, but the deep language, the deep understanding of the vernacular, of the specific terminology of a narrow industry vertical is more important, because it provides the AI with the ability to recognize 99.99% of what is meaningful and make all the right decisions.
Great. We're coming near the end of our time. If there's any more questions, please pass them in for Vadim. Vadim, did you have any closing words you'd like to say about the AI industry and where you guys are going with it?
We are, Stuart and I and our anchor LPs of Viaduct Ventures Fund 2 are planning to capitalize on the value creation that will be created by AI-based companies of the 2023-2024 vintage. So a combination of AI, but also US first-time equity equity capital raisers 2023, 2024, and then the ability to continue investing in our pro ratas way into 2028. This we think is the recipe for creating an outsized return from our LP and for supporting the leaders of our portfolio all the way to a tremendously successful M&A and a tremendously successful IPO. So that's what we're here to do. Give us a ring.
Great. Well, appreciate that. Thanks so much for sharing that with us today. And we'll be connecting you with people that are interested to learn more about the fund as we go forward. And with that, let's go ahead and pass it over to Jay Cormier of Viaduct. And he's actually using AI in a medical device, and we'd like to hear more about how that's coming together. Jay, go ahead and share your screen and kick off.
Well, great. Thanks very much, Hal. And thanks everyone for your time today. We're here to talk about seeing smarter, how we can use AI driven digital health for vision. So this is definitely a little bit of a different twist on the AI. And I will dive in from there. So again, I'm Jay Cormier, founder and CEO of Viaduct. What we're doing is we're simulating natural vision. So our proprietary system and software platform helps people see better. We employ open market hardware. So to the point made earlier, we're trying to move towards a SaaS model over time. This integrates with the real world. The beauty of this is it is an FDA Class 1 exempt device, so we don't have a lengthy FDA approval cycle. We do have 8 patents granted and 14 pending. So fundamentally what we're doing is we're taking in images through the camera in the glasses. Our proprietary software processes and enhances that image with computer vision, and with the AI adapt to the person's habits as well as their environment and their visual deficits. And then so we're projecting that modified image on the screen sitting in front of their eyes. So our initial indication, we targeted macular degeneration. This is the #1 cause of vision loss for people over 60. The reason we can help is macular degeneration is a loss of your central vision. However, you retain your peripheral vision, and that gives us something to work with and optimize. Now, retinal diseases overall affects 400 million people worldwide. Again, macular degeneration is almost half of that. There's also diabetic retinopathy and diabetic-related eye disease, which is another 100 million people. We actually have a clinical study underway on that now. And then macular pucker or scarring, which is a distortion of the vision. We have some fundamental foundational patents to attack that as well. Our initial target, of course, being the US, which we believe alone is a $10 billion opportunity. So what do? We enhance that vision and adapt to the users. As I said before, like a thumb, the retina is different for every person. So how the person's visual deficit certainly is not uniform, and it's not one size fits all. So this works well with a software approach, which is really a stack of enhancements. Not everyone uses the same enhancements or the same features, but we're about customizing and adapting to that person. Also, we are data enabled and remote upgradable, so we certainly have the nascent seeds of a recurring revenue model being planted now, which we can always monetize in the future with future software upgrades. Again, although we don't require FDA approval, we did run a clinical study. This was basically 2 main endpoints. The first, of course, was visual acuity, which is how much do the Viaduct glasses help someone over their regular glasses. And this is where we saw anywhere from a doubling to a quadrupling of visual acuity in these users. The other thing, of course, is we're trying to help people remain independent. And so we also measured and quantified the ability to complete everyday tasks. And that's where we saw a stunning 5 times ability for Viaduct to help people get their tasks done over their regular glasses. So this is in a range of use cases, and that's what I wanted to reinforce here. We see people using this for all different use cases. We talked about, of course, reading is a common one, but people go to the store with them. You see some of our users here being able to watch their children play soccer. Of course, Chuck over here decided that the best use for his glasses was to go gambling at the casino. But hey, if that makes him happy, then that's what we're here for. You can see Sam there going on a cruise with them. I do want to note that all of these people you see in these pictures are 2200 to 2400. So they are all legally blind and able to get huge improvements with Idaptic. So when we look at it from a business standpoint, we see the analogous model is the hearing aid market with roughly the same size TAM, demographics, and therefore we just laid right on top of them with the price points. It is also a similar reimbursement pathway where for the most part it's a direct consumer payable. And today the hearing aid market is an $8 billion market. So again, we believe we have those same potentials, and that's what we're working on. Now, what we have done over the last few years is got to our most recent product, which was the i5 released last year. We have been ramping that up and scaling revenue. And we're doing that through the eye care channel. And that's what we're raising money for today to complete our bridge round to help continue that scaling. Again, I talked about the eye care channel. This is where we found the most success. This is the highest retention rates of over 95%. Very loyal customer base. And so we are focusing on rolling out our product through these optometrists mainly. This is going great. And of course, this is what we want to build on. You can see our progress so far to date. And of course, this is all about onboarding more of these optometrists so they can sell through to their patients. The founding team is a seasoned technology founding team, as well as some of the leading medical experts in retina. And we also have one of the strongest medical advisory boards in the this eye care visual aid space, with some of the leading retina specialists, low vision specialists, and optometrists in the country and even the world. So with that, we see a huge revenue potential upside. We just started that revenue ramp last year. We're going to try to grow anywhere from 6 to 10x this year. And with fairly modest penetration goals, you can see how this turns into a multi-$100 million business down the road. So with that, I just want to sum up with our plans to be #1 in this nascent multi-billion-dollar visual aid market by offering the best technologies and also the easiest to dispense products and the easiest for the users, so we can use that AI to make more powerful products that's easier for the users to use. And of course, by creating a community and engaging them, we can also provide future services and software for monetization as well. So with that, I want to thank you and would be happy to answer any questions you may have.
Yeah, my first question is, can you talk more about how you're using AI to improve or enhance the vision there?
Yeah, so again, there's two parts to it. Certainly, the computer vision algorithms are looking at the scene for the user, okay? So our algorithms are processing that image. And then what we will do is, and I'll just use one example, but there's other examples where when they focus on something, so we're monitoring head movement, they focus on something, it then takes autonomous action on their behalf. They don't have to push any buttons, and then helps that see that item better. When they change their focus of attention and look at something else, it can restart that process and adjust automatically. So that's really kind of just scratching the surface on some of the things our AI can do. We also have facial detection built into that same functionality.
So with more data, can you gain more accuracy? That's how most AI systems work, is based on the training data, and over time you get more of it. Will more data actually improve the performance?
Yeah, so certainly. So right now, again, we're doing that edge AI, if you will. So this is all kind of pre-trained. As you gather more users, and then, and of course, we can connect those users, then we can help perfect and make that an even better and more accurate algorithm for them.
So the next question from the audience is, what % of macular degeneration sufferers cannot be helped with this technology? i.e. their condition is too serious?
So I would say it this way. When we look at the macular degeneration indication, we think that about 40% of those people are intermediate and late stage macular degeneration. Those are the people we're targeting. So we're not targeting the early stage, we're targeting the intermediate and late stage. And I would say we can help everyone in the intermediate, and we can help most of the people in the late stage. And so that's really in that visual acuity between 27 and 2400 we find is the sweet spot. But we've helped people all the way up to 2800 and beyond. So I'm not sure there's any practical limit. It depends on what they're trying to do with the device.
My understanding, macular degeneration is very difficult to solve at the later stages. At what point are the current therapeutics effective and not effective at the stages of macular degeneration?
Yeah, so that's a great question. First of all, I should back up and say, when you look at macular degeneration, we talked about the different stages, but there are two different types of macular degeneration, dry AMD and wet AMD. Wet AMD is about 10% of the cases. There are therapeutics for wet AMD, and those can improve your visual acuity some. So there is something that exists for those wet AMD patients. However, for the dry AMD patients, there is no therapeutic that helps improve their vision. The only thing out there that's just barely coming to market now might help slow it down. And if it slows that progression and keeps it in that sweet spot, then we can be a combination therapeutic and really help those people.
Great. Are there any other questions from the audience? Or Vadim, did you have any questions?
Yes. Can you describe the product? How does the product work practically?
Yeah, so again, I'll put it on right now. This is our latest product. This is a lightweight pair of glasses. You see the camera right there. And of course, we're taking in the image through the camera. I don't know if you can see it real well here, but there's two high resolution 1080p displays that are sitting in front of your eyes. Okay, now that's in the glasses. This particular pair I have is a wired version, so that's tethered to a cell phone. The cell phone does all the processing, all the video processing, as well as running any of the AI and computer vision algorithms that we're employing.
Okay, and your business model today is you're selling this device.
Yeah, so great question. So today, because certainly AR glasses are not ubiquitous, okay? So we actually bring in the glasses, we provision it with our software, and we sell that solution as a bundle. In the future, as AR becomes ubiquitous, then what we're setting ourselves up for is the ability for someone to download our software, maybe go out and buy a pair of glasses, and then put that on a subscription model. I still think we're several years away from that. And what I suspect right now is the market will segment where some people will want to buy that complete solution, and some would just as soon have a downloadable version.
We have a question from the audience, which is, are you using Bluetooth, and what's the price of the product?
Yeah, so we're not using Bluetooth for the video processing. I think that's the question, right? We use Bluetooth. We can use a remote control connected through Bluetooth. That's easy enough, and we do that. But for the video processing, because those are two 1080p displays, so we're pumping a couple million pixels up and down the wire, Bluetooth is not made to handle that. Today, our product we just released, that retails for about $3,750. So we range from anywhere from $2,000 to $6,000 for the solution, depending on the model.
Is the hardware off the shelf, or is it custom made?
So it's mostly off the shelf. That's how we keep our R&D costs low, but we do some modifications and have some exclusivity with our vendors to make that particular or specific for low vision.
And what protocol is used for video data?
So we're using OpenGL to move the video around. We're right now running on Android phones. So that's, a pretty standard programming language for that. And then, of course, our algorithms are running in C#.
Well, great. And what's the next step for the product? What do you plan to do next with it?
So for the next steps, we believe that we can use AI even further. to improve resolution. So getting to what we would call super resolution is certainly on our roadmap. And of course, using more of those AI algorithms to move beyond just facial detection, but also facial recognition and object recognition.
Well, great. And can you talk more about your current fundraise?
Say again, Hal?
Can you talk more about your current fundraise and where you are with it?
Oh, yeah, sure. So right now we have a bridge round open. We don't think we're quite ready for a Series A yet. So we have $1 million bridge round. That is on a safe with a 9.9 million cap and warrants that go along with it. And that's already over half full and in the bank. So a little less than 500,000 available today.
Well, great. Any closing comments about IDAPIC?
I think all I would say is I really appreciate everyone's input. We're certainly helping a lot of people, so please spread the word. And it's really nice to be able to see a product ramp after you've put it many years into the development of it.
Great. Thanks, Jay. Appreciate that.
Thank you all very much.
Our next speaker, our last one, is Botrista. Sean, if you'd like to go ahead and turn on your video and share your screen, love to hear more about Botrista.
So Barista, the name comes from Robot Barista. We are now the leader in craft energy and craft beverages automation. The company has been around for 5 years. We are now at the Series B stage, not very expensive Series B because of the market last year, but there's a lot of growth and opportunity that we actually built so far. Today, we are the leader in this game, and I want to start with my quick background. I'm a serial entrepreneur. I sold my first company 15 years ago and joined Tesla 10 years ago. I was one of the fluid dynamic engineer, the only one who actually take care of all the dispensing, sealant, and any kind of liquid in the Tesla battery pack. I worked very closely with Elon Musk 10 years ago and for almost 4.5 years. In the meantime, my family owns Starbucks, Teaspoons. We operate a lot of coffee shops and tea shops, boba tea shops, smoothie shops. At peak, I used to own 45 of them. So it's a good mix of fluid dynamic and beverages. What we see in the beverage world is basically across all of the United States, it's a $280 billion market for on-premise non-alcoholic beverages sector. In that $280 billion on-premise market, everyone thought that player like Coke or like Pepsi are actually the major players. The fun fact is that they actually shrink now. People are moving away from soda. They are not drinking or consuming fountain drinks, any like high sugar content beverages anymore. So as a result, all these soda companies has less than 5% of the market share for the on-premise non-alcoholic beverages in the US. Today, the biggest problem is that people walk into a restaurant, these drinks are boring, not healthy. But on the flip side, when you walk into a Starbucks, people feel happy, right? Because there are a lot of options, it's customizable, it's all healthier for you, better for you, and lower sugar content. And fun fact, even at Starbucks, more than 3/4 of their revenue today is from this fancy cold specialty beverages. And it's the best part of it is higher margin than selling coffee. So everyone's going after this. The trend is like Dutch Brothers, Starbucks, Peet's Coffee, everyone is doing this kind of crafted beverages. But at the same time, the problem is that this is a new industry. No one actually have automation for this, right? So to make this beverage happen, they need to train operator. They need to build out a bar. They need to actually invest in the hardware and all the software and the training costs. So as a result, what Barista do is we basically have a all-in-one machine, fully automated. We are the most advanced technology in the market. As a leader, we are now in thousands of restaurants signed, 26 states. This technology can actually allow any person to pour Starbucks level beverages in the footprint of a fountain machine. We cover beverages like from crafted iced tea, like strawberry iced tea, mango iced tea, all the way to crafted lemonade, plant-based products, energy craft drinks, even frappuccino, coffee, boba tea, iced coffee, like aquafresca, sparkling smoothie, milkshake, anything you can imagine. So the category is actually quite large, and our business model is basically using a data-driven AI beverage director to help restaurants and the operator to find out the perfect menu based on their demographic and geographic. Today, the team is formed by myself and with all the industry experts from, for example, our board member used to be the CEO at Red Lobster and Burger King. And that our team has a pretty good mix from beverage industry and tech industry. Our biggest value proposition is very easy, right? So it's so easy to sell a product that add more profit instead of saving costs. So all of our pitch is just like, hey, your menu are quite boring, right? You only sell soda. So now you can sell iced coffee, fancy crafted lemonade with pineapple juice. So these are the products that actually move the needle and actually create a 40% additional profit for restaurants. So like this restaurant Ike's, they are making $4,000 a month net profit from our program without hiring any additional staff. Same thing for Halal Guys. And today, another one that we have signed recently is Shipley Donuts. The reason I put it here is because I bet a lot of you based in Texas. So this is another great account. They have around almost 500 locations today, and then we can roll it out with at least 350 locations this year. This will easily be a $10 million ARR account for us. So all we are doing is we're collecting our first 20 accounts to collect the first $100 million ARR growth. Another side of our business is because when we look at this kind of business, it's very important that we didn't cannibalize soda drink sales, right? So when we talked, we got reached out by all of the soda company. They want to acquire us, and we keep turning them down because they know that this is a pure incremental sale for them. It's upselling more beverages. So even soda company acquire us, they can just double to triple their revenue based on this understanding. And this is basically a quick summary on comparing with barista and fountain machines. So first of all, we didn't cannibalize each other. We are all different categories. The best part about our business is, number one, the available market in the US is large. It's $65 billion versus $5 billion as compared with soda. Second is the dollar margin is great for restaurant operators because they are selling these drinks retail at $4.5, which is cheaper than Starbucks, but the quality is better than Starbucks. As a result, they have a double profit per month from our program. And for us as a B2B business, we basically lease the robot and then supply the ingredients as a subscription. Our month-by-month revenue is actually 6x than any kind of soda companies. And that's why we got reached out a lot by them, because it's a very important game changer in the game. The entire business model exists because we have a dispensing technology that we can dispense any liquid. So today, this technology is called algorithmic dispensing technology. It's based on software-based, very low cost on hardware. We can dispense any natural ingredients like puree, honey, or cane sugar. The more natural it is, when it's dehydrated, it will be very thick and high viscosity. So that's what we do, right? If you are looking for everyone in the market, they are all looking for something healthy, natural, or more fresh, but they cannot concentrate in a certain format because then there's no machine can dispense it. So now barista can actually solve both of the problem. We can dispense high viscosity, dense liquid, so that the margin and the business model is very easy to scale. But at the same time, the product quality is phenomenal. This is a good overview on all the spectrum of these beverage ingredients, but a good example is like purees and cane sugar, honey are really thick and high viscosity. And we own more than 100 patents globally on this dispensing technology. Finally, I think puree is very delicious. If we are meeting in person, I would love to let you try our drinks. It's better quality than Starbucks. This technology actually solved multiple problems at one time, and it is actually using my 15 years tenure in fluid dynamic and automation, because we have to find a small pump, small deployment hardware, low cost, easy to maintain, passing all of the FDA and USDA and NSF certification, and it has to be auto cleanable. So with this technology, now we are in a lot of locations making impact on not just profit, but also the sustainability. While we are dispensing it in a thicker format, we save a lot of carbon footprint while dispensing and shipping our products. Finally, the growth. So today, I'd like to share some large accounts. These are not our bread and butter, but it's good that everyone knows them, like Starbucks, Inspire Brands, 7-Eleven, Jamba Juice, Wawa, Burger King. These are the ones that we're working with. We're engineering certain solutions for these specific accounts. And we're in later stage, we test machines with them in the real stores already, and all the tests are showing very, very positive. And our bread and butter is actually medium-sized restaurants. So like, like Shipley Donuts, all of the brands that I mentioned to you. Shipley Donuts, Halal Guys, like Free Birds, or like TGI Friday, those are medium-sized. They move faster with faster decision points. This is a quick view on where we are now. So we already double our MR. It looks small in 2022, but we actually already double from 2021 to 2022. In terms of 2023, we are continuing to grow. And the beauty of this now is we have total of $21 million ARR signed contract already. And with the current deployment speed, the pink is what we are deploying this year. So we are very confident that we will reach at least $12 million ARR this year, and the goal is to reach $20 million ARR this year. The fund that we are going to raise now is basically just to deploy the machines and have our project management to actually communicate faster. We are not hiring a crazy army of technicians. We work with every partner's third party on technicians, shipping, installation, servicing, as well as ingredient supply chain. So today we are just raising for deploying the actual AR based on the signed contract. Finally, this is a summary of our slides. Our goal is to surpass Coca-Cola in their on-premise sector within the next 10 years. It's a big market. We already proven with a recurring revenue business model. We have a lot of patents and IP, as well as data in our AI beverage director to create a high barrier of entry. We are raising a total of $30 million for Series B, and $27 million is already in the bank. So I'm just looking for any partners who are interested in this kind of food tech industry, as well as better, healthier beverages for the future. Thank you all. My name is Sean, and this is my email. Feel free to contact me after the meeting.
Great, thanks, Sean. Our first question from the audience is, the latest ingredient trend is around microbiome ingredients with the latest family of prebiotics. Is it something Botrista considers for science-based ingredients?
Yes, definitely. We consider certain functional beverages, functional drinks like energy boost, even CBD, probiotic, digestion aid, or like even certain products, they call it collagen for human or for woman beauty kind of industry. And we are also partnering with certain like alcoholic beverages company as well, because they like to create cocktails and with a lower proof. So some of them are molecular based boost.
Great, thanks. And Vadim, did you have any questions there?
Use of proceeds. It seems like the ARR is quadrupling or quintupling every year. How are you going to spend the $30 million?
Okay, that's a good question. So the $30 million, we are continuing to invest in our R&D. There are quite significant amount of large chains want us to deploy our technology in a little bit different format. And at the same time, we are scaling our beverage ingredients R&D team, because currently we are all in technology, robotics, and software. There are some demand from the client side. And the rest of the $30 million, so that's the first two is kind of 1 quarter each. And then sales and marketing is another area that we're doing, because our goal is, I already sold companies before. My real goal on this business is I want to bring it to NASDAQ and actually start competing with major players. The goal is get to the $250 million ARR within the next 3 years. So we continue to invest in certain channels. Like all this deal today, right? This deal is very straightforward. All these pink and greens, all we need is 6 more accounts, and we already signed 4 of them to reach this goal. So it's very tangible, very solid. But after 2024 is where it becomes very interesting. How do we bring $20 million to $250 million in 2 years? That's what we are focusing on.
What do you envision as the exit here?
So our exit timing will be approximately 2025. It could be an IPO or M&A. Depends on the market, but there's a reason on 2025. Number one is all of the large chains that we work with, they all want to roll out 2025 and 2026. So that's a good timing because everyone would know who their supplier is. Second is that the market within the market is good. It's better than last year and this year, and the macro market. And finally, we've been talking to certain potential M&A companies that are the leaders in this industry, and they have deep pockets. They only buy companies that is worth more than $1 billion because they don't want to risk to deploy in their channels. So we want to build a company to 2025 where minimum my goal is $100 million, but I really want to go to $250 million because in that sense our valuation could be in that perfect range. The sweet spot will be, I would say, $1.5 billion to $5 billion will be a sweet spot that we can attract a lot of buyers.
I remember talking to the executives at Coca-Cola about 5 years ago, and they predicted this very thing. We would have soda fountain level quality distributed widely. We bring the soda fountain back because people wanted natural juices and so forth. Why did they not deliver on this, but you did?
It's about that technology that we do, because when I look at natural products, it's typically very hard to preserve it in a thick way, right? So when they do their R&D in beverages, they all come up with a chemical formula, which everyone can tell it's not natural, right? So that's what is missing today.
Great. Okay. Are there any other questions from the audience? Go ahead and post them now. And with that, we'll be wrapping up here soon. Vadim, did you have any final questions?
No, not really questions, but rather both are very interesting. Botrista is raising Series B, probably a little bit too expensive and too late for us. But I will share this. I did ask some additional questions via Shane earlier, and I have shared this opportunity with some of our LPs. This is exactly when Sean is talking about, taking on Pepsi and Coke directly and overtaking them, and then he actually, your first reaction is, yeah, what is he talking about? But then he actually explains what and why. For example, this slide that you're looking at right now, it's clear what is happening, and it's real. So definitely interesting, definitely a real technological / business model / economic play. I'm really swept off my feet with Idaptic, and I would like to spend a lot more time with Idaptic. There is, in my view, there is a big what they're doing and that what they have been able to do so far in terms of people's vision is amazing and sweeping people off their feet. I do not understand why their revenues is just $200,000 so far. So there needs to be, they're probably very, very close, and probably a very, very small investment is needed to get their revenues and to get the total adoption started. And once total adoption starts, he's exactly right. It is the same size as the hearing aids. It's a massive industry. So really swept off my feet with Idaptic. Early stage, the right size, the right industry, the right.
Right. Cool. All right, Vadim, thank you. And there is one last question, Sean, from the audience. How does this go beyond Coke's freestyle? Do you think this is something Coke will ever do, or you think it's just not part of their culture?
Yeah, so I can share the parts that is public data because we already signed NDA and have been working with them. So Freestyle is a platform that do soda innovation and create a lot of different soda in the same platform. What Barista do is elevating the whole platform concept to the next level. So Barista is where with this technology and data infrastructure, they can basically decentralize all of the R&D process and they allow any brands at anywhere. So for example, they acquire Costa Coffee, right? And Costa Coffee, craft drinks, or like any new concept that can actually bring these brands to this platform to do a more cross-channel play, not just open up coffee shops, brick and mortar, but really entering like a convenience stores, campus, or any different kind of new venue style. So with this technology, that's why they are looking for us, because they already make a move on acquiring certain craft beverages brands. And for them, the next step immediately is they want to create a bigger picture for freestyle into a next level platform. We are not sure which brand they will end up doing. They might call our product freestyle later or whatnot, but it's part of the discussion that is happening, looking at the bigger picture impact for the entire industry.
Great. Thank you for that. And with that, I think we're near the end of our time. I want to thank all of our presenters today, Vadim and Jay and Sean, for your presentations today. We'll follow up with the investors and those in the audience for interest and come back with you afterwards. Those in the audience, thank you for joining us today. Appreciate your feedback and great questions, and we'll look forward to seeing you guys next time. And with that, we'll go ahead and wrap up for today and be back in touch. Appreciate you joining, guys.
Thank you, everyone.
Thanks.